What if I told you that the most sophisticated financial instruments we use today, the very DNA of Wall Street, were not invented in sterile boardrooms, but in the dark, cramped hulls of slave ships? We are taught to see modern finance as a pinnacle of human logic, a world of complex algorithms, high-speed trading, and immaculate skyscrapers. But this is a paradox. The system we trust with our savings, our homes, and our futures was built on a foundation of the most illogical, brutal, and inhumane practice imaginable. You think the building on Wall Street is made of steel and glass? Think again. Its original foundations were laid with commodities, tobacco, sugar, and human bodies.
This is Finance Beyond Seas. We explore the moments where the currents of maritime history and the tides of the global economy collide. We're here to navigate the wreckage of the past, to find the financial lessons that will protect you today. We analyze history and systems, not futures. Nothing presented here is financial advice. It is purely historical and economic commentary.
Our story begins not in New York, but in 17th century London, in a small coffee shop on Tower Street, owned by a man named Edward Lloyd. This wasn't a bank, it wasn't an insurance company. It was simply a room where men with money and men with ships could meet. Lloyd provided reliable shipping news, and the merchants, ship captains, and wealthy investors did the rest. This coffee shop became the birthplace of the world's most famous insurance market, Lloyd's of London. Here's how it worked. A merchant wanted to send a ship to the West Indies. The voyage was incredibly risky. Storms, pirates, disease. To mitigate that risk, he'd create a proposal. Investors, or underwriters, would each sign their name at the bottom of the policy, literally underwriting it, and accept a portion of the risk in exchange for a portion of the profits, or premium. This was the birth of modern syndicated insurance, a brilliant financial innovation. But what was the cargo they were insuring? On the most profitable routes, the triangular trade, it wasn't just sugar or rum. It was human beings. The Lloyd's market became the global hub for insuring slave voyages. They didn't just insure the ship against sinking. They insured the human cargo against loss. Insurers developed complex actuarial tables to calculate the precise financial value of a human life. They calculated mortality rates, the risk of disease, and the danger of insurrection. The infamous Zong massacre of 1781 wasn't just a horrific crime. It became an insurance claim. The captain, having run low on water, ordered 133 enslaved Africans thrown overboard alive so he could claim the loss on his insurance. This is the micro lesson. Modern risk management was born from the practice of turning human beings into abstract financial assets. The system learned to quantify, price, and trade anything, starting with people. But it wasn't just the insurers profiting from this oceanic trade in human misery. Someone had to finance the voyages in the first place. Let's look at one of the most prestigious names in American banking, Brown Brothers Harriman. Today, it's a private white-glove investment bank, but its roots traced back to the Brown family of Baltimore and Liverpool. The Browns were not initially slave traders. They were factors, or middlemen. They financed Southern planters, giving them loans to operate their plantations. The collateral for these loans? The cotton that the enslaved people would pick. The Brown family built a transatlantic empire, shipping this slave-grown cotton to factories in England. The sea was the artery that connected the dark asset, the enslaved labor, to the clean capital, the London Bank. But then, during the financial panic of 1837, planters began to default on their loans. The Brown family had to foreclose. And when they did, they didn't just seize the land, they seized the collateral. The bank, Brown Brothers, ended up owning plantations and hundreds of enslaved people. The theme is clear. The institutions that seemed one step removed from the trade were, in fact, the engines that powered it. They created the credit, the loans, and the financial oxygen that the entire system needed to breathe. This connection isn't just metaphorical or financial. In New York City, it was sickeningly physical. Today, we see Wall Street as the center of global finance. But in 1711, the city government designated a specific spot on that very street as the city's official slave market. It was located at the corner of Wall Street and Pearl Street, right at the Wall Street slip on the East River. This wasn't a coincidence, it was logistics. The ships would dock, and the cargo, enslaved Africans and Native Americans, would be unloaded and taken just a few steps to the auction block. Here, human beings were bought, sold, and hired out as day labor. The city itself profited, collecting tax revenue on every single sale. This market operated for 50 years. The very street that would come to symbolize stocks and bonds was for decades a place where families were torn apart for profit. The pattern is undeniable. The sea delivered the assets, and the street, Wall Street, turned them into capital. The proximity was not an accident. It was the entire business model. Fast forward to today, you might say. This is all ancient history. This has nothing to do with my 401k or my bank account. But that's where we're wrong. That capital didn't just vanish when slavery was abolished. It compounded. The immense profits from the slave trade and slave-produced commodities, cotton, sugar, tobacco, didn't just build plantations. They were diversified. That dark capital flowed from the sea and inland, financing the Industrial Revolution. The profits from James Watt's steam engine, a technology that changed the world, it was funded in part by capital from West Indies slave plantations. The banks, like the predecessors to J.P. Morgan Chase and Bank of America, that accepted enslaved people as collateral, used that capital base to grow. Insurance companies like Aetna and New York Life sold policies on enslaved people. That float, or premium income, became the seed money for their future empires. That generational wealth built names, endowments, and corporations that are still pillars of our economy. That capital is in the endowments of our oldest universities. It's in the foundations of our most revered cultural institutions. It's in the corporate treasuries of brands you know.
The pattern is clear. The financial system we inherited was not built despite this history. It was built because of it. The dark capital from the sea was laundered over generations, becoming the clean capital that flows through our stock market today. We are all swimming in an ocean of money that has a forgotten, dark current. What does this mean for you? It means that the financial system you interact with every day has a hidden operating system. It was designed and perfected with one core purpose: to turn anything into a tradable, abstract asset. It started with human lives. In 2008, it was your homes, bundled into mortgage-backed securities. Today, it's your personal data, your attention, your student debt, all packaged and sold to the highest bidder. The risk is that this system, at its core, does not see you. It sees an asset. It sees a liability. It sees a data point. The same cold actuarial logic that calculated the value of a human being in the hull of a ship is used today to calculate your credit score, your insurance premium, and your risk profile. The 2008 financial crisis was a modern echo of the Zong massacre. Bankers took safe assets, people's homes, and bundled them into toxic, complex instruments they didn't even understand. When the assets went bad, they threw them overboard to save the ship, the bank, and claimed their insurance from the government. The cost of being unprepared, of not understanding this system, is that you are always the cargo, never the captain. You are the one who gets lost at sea when the financial storm hits. So how do you protect yourself in a system with this DNA? First, we learn from Lloyd's of London. Understand what you are buying. The system is built on complexity and fine print. Insurance, loans, investments. Read the policy. Is it designed to protect you, or is it designed to turn you into a profit center for the underwriter? Financial literacy is your first line of defense. Second, we learn from Brown Brothers Harriman. Diversify outside the system that holds the collateral. The 19th century cotton economy was a monoculture. When it collapsed, everyone tied to it collapsed. If 100% of your wealth is digital, in stocks, in bank accounts, in cryptocurrencies, you are vulnerable to a systemic panic.
History has shown, time and again, what people flee to when the paper system fails. This is not financial advice, but a historical observation. They flee to tangible assets that cannot be created by a bank or deleted by a keystroke. They flee to gold and silver. They flee to productive land. But most of all, they rely on transferable skills. Your ability to build, to teach, to code, to heal, to communicate. A skill is the one asset you truly own. It is a means of production that cannot be foreclosed on. The system is vast, but it's not all-powerful. By understanding its origins, we can navigate it with our eyes wide open. The sea is the perfect metaphor for our financial world. It is vast, powerful, and it connects us all. But it also buries its secrets in the deep. On the surface of this ocean, we see innovation, speed, and clean digital transactions. We see progress. But look beneath the waves. The dark capital we've traced today hasn't disappeared. It has simply been laundered by time and technology. The same deep currents that carried the Zong now carry complex derivatives. The same logic that bundled human lives now bundles subprime mortgages and personal data. The patterns of history do not just repeat, they evolve. The system learned. The tools of finance, debt, leverage, insurance, collateral, are not inherently good or evil. They are, and have always been, powerful amplifiers. In the 18th century, they amplified human greed into a global atrocity. Today, they continue to amplify. They amplify small risks into systemic collapses. They amplify inequality. They amplify indifference. This is the most crucial lesson. That original sin, the act of turning a human into an abstract asset, was not the end of the story. It was the blueprint. We cannot drain this ocean. We cannot rewrite the history that built this system. But we are not powerless. Your job is not to fix the sea. Your job is to become the captain of your own ship. If this video gave you a new perspective on the money in your pocket, I want to hear from you in the comments. What part of this hidden history shocked you the most? And where else in our modern world do you see the echoes of this cargo logic at play? Let's discuss it below and subscribe to Finance Beyond Seas. We're here to pull back the curtain and navigate the hidden currents of finance together.
This is Finance Beyond Seas. We explore the moments where the currents of maritime history and the tides of the global economy collide. We're here to navigate the wreckage of the past, to find the financial lessons that will protect you today. We analyze history and systems, not futures. Nothing presented here is financial advice. It is purely historical and economic commentary.